Boom! What is up, Waves Capital? It's Royce Jacob, and welcome back to the channel. You guys, I know we're already about a week into the new year, but 2023 is still young. Therefore, I want to share a few of my macro market predictions, both for the equity markets and crypto markets, for the entirety of the new year. Okay? On top of that, I also want to reflect on the year of 2022. It was a crazy year. There was so much going on, both good and bad. So I want to reflect because ultimately reflection is necessary for growth, not only in the markets, but for pretty much every aspect of your life. Okay. So we're going to keep it short and sweet today. At least I'll do my best to do so. I know I'm not the best at that sometimes, but do my best to keep it short and sweet for you guys. We will be sticking to one individual tab for the most part, at least. We'll reference a few other tabs, but I simply want to read over the entirety of the New Year's Eve newsletter that I sent out on, of course, New Year's Eve. Okay, in this newsletter, I break down, once again, a few of my macro predictions for the new year while reflecting on the year that was 2022, going over some of the ups and downs. And ultimately, I really do want to add to this. I don't want to just read this kind of verbatim, but I'll read through this. If I feel necessary, I will chime in and kind of preface any of the thoughts that I have here. But this is just a summary of, again, my reflections, what I see, and what I think will kind of go down over the course of the new year. And once again, I will add on to this when I feel necessary. One of the primary things that comes to mind being a few of the sectors that I believe are most prone to seeing hype cycles. So if you've been keeping up with the channel lately, you would know these sectors, but I do want to mention those, and I think I'll be making a video specifically about that over the coming days, if not the next week or two. Okay, so we'll read over this guy again, reference a couple of other tabs, but let's get to reading, you guys. Once again, Happy New Year. Again, I know we're already a week in. If you're watching this at a later date, that's okay. That's kind of what I want to make this for. Evergreen, at least for the first couple of months of the year. So let's get to reading, and once again, I will expand whenever I feel necessary. So, in this newsletter, I feel it'd be best for us to focus on reflecting upon the past year, and more importantly, let's focus on the year ahead of us. 2022 was full of ups and downs, but overall, I think we can all agree that the downs far outweighed the ups. The Fed began raising interest rates due to scalding hot inflation, which is, of course, still an issue, a very real issue. Right now, all eyes are on the Fed, especially with no foreseeable at the time of recording this January 5th. There's no earnings coming up. Really, all eyes are on the Fed, and all market action is based upon the Fed and interest rates. So I do put a heavy amount of emphasis on the Fed and interest rates in the newsletter and even in my mind right now, because that's, I would say, objectively the most important thing when it comes to the macro right now. Okay. Again, raising interest rates. This is the primary reason the markets have been selling off all year. When capital becomes more expensive, the US dollar appreciates in value. So again, interest rates go up, the cost for borrowing capital becomes more expensive. That's what interest rates gauge. And in turn, the US dollar, the Dixie, appreciates in value. And as the golden rule of macro states, it's just my personal golden rule, the dollar up, everything else down, because everything else, all asset classes across the board, ultimately trade against the US dollar, at least for the most part, okay? As everything, or as it goes with pretty much everything, there are going to be a few exceptions, but for the most part, dollar up, everything else down, okay? So, looking forward to 2023, I think that inflation begins cooling significantly, and I think that we see the first signs of this when the December CPI report is released in mid-January. So, reference a quick tab. To be specific, because you guys really want to keep an eye out for this one. This will inevitably create for some volatility. Personally, I think the volatility will favor the upside, but December CPI report, the Consumer Price Index report, will be released at 8:30 a.m. Eastern time on Thursday. So even before the market opens, Thursday, January 12th, will be very volatile, and that Friday, the 13th, will likely be very volatile as well. Okay, so moving on. Again, I do think that this would encourage the Fed to hit the brakes and eventually pivot to lowering interest rates, which will ultimately lead the markets higher. And I want to make this very clear, you guys. I don't think, and I would say there's almost a 0% chance that the Fed lowers interest rates over the next month or two. But I do think it's possible that they actually pivot come this summer. I think in the next maybe January, maybe by February, they might have one interest rate hike left in them in January. But because personally, this is all speculation, but just anecdotally speaking, looking around me, which is, a lot of the time what a lot of us, the only thing we can do as traders is look around and have that anecdotal personal evidence and use that to affect our decision making with the existing data sets at hand. But anyway, my personal opinion is that the December CPI report does show signs of inflation significantly cooling. I do think that catalyzes a rally in the markets because once again, although the Fed isn't going to step in and immediately lower interest rates, they might halt at their upcoming meeting. They might say, okay, it's time to slow down, and there is a pivot in sight. And really, that's all it would take for the markets to absolutely rip, because as you guys know, the markets front run the economy itself. Okay, the markets are efficient at pricing for the most part. This past year has proven some market inefficiencies, but for the most part, the markets are efficient in pricing in foreseeable economic headwinds. Okay, or tailwinds, either or, good or bad. In this case, it would be a tailwind because there's a sign, there's a light at the end of the tunnel, which is the Fed pivoting and starting to lower interest rates, making capital cheaper once again. Okay, that's ultimately what it comes down to. And of course, today, just to reference some very breaking news, Amazon just announced last night, once again at the time of recording this, that they are laying off 18,000 workers. Maybe by the time you guys are watching this, it's even more than that. But 18,000 workers, you guys. The Fed is achieving their goal of destroying demand, creating pain in the economy. And again, that's really what they want to see. It's the harsh reality of what they want to see. But ultimately, these job cuts and the economic pain that we're experiencing right now, the consumer destruction, is good for the equity markets, okay? Because it's one step closer to the Fed lowering interest rates, okay? That is really the base macro argument, you guys, and that's really going to be the big trend, especially in Q1 of 2023. So that is my prediction. I'll say, just to wrap up this, I do think inflation, which was scalding hot for the entire year of 2022, will begin cooling down in the year of 2023. And I think it will happen very fast. Once again, the January CPI reports on January 12th, 8:30 a.m. Eastern time. Okay, let's move on. The other major market theme of 2022 was, of course, our beloved crypto. Unfortunately, it's become a love-hate relationship for many and really left a bad taste in a lot of people's mouths, okay? But again, this was, if you guys have been around in the crypto markets for a while, this is kind of just really the cyclical nature of crypto. It's not just for price. The price isn't the only cycle, but investor sentiment and the emotional aspect of how investors perceive crypto is part of that cyclical nature too, okay? But over the past 12 months, the cryptocurrency ecosystem has been riddled with bad actors, irresponsible institutions, definitely put the air quotes on that, institutions, and straight up fraud, SPF. This extreme toxicity coming out of such an aggressive bull market, along with the rising interest rates, created for one of the greatest bubble pops we've ever seen. I can personally attest to the fact that this one felt much darker than the 2017 pop. So again, I was, honestly, I would say I'm lucky to have experienced that, the run up in 2016, 2017, and then the pop in 2017 as well. Or 2017, 2018, one of the two, I can't remember. But in one of those years that was overlapping each other, I was there, and it's good to go through that sometimes because you get to understand hype. And after this, I will relay into what I think will be the hype cycles. But again, this time around was much darker. But again, that builds that emotional fortitude. If you guys are here right now, if you guys are still playing the game, if you're still watching these videos, so I assume you're still interested in the equity markets and crypto, then this is just another notch on the belt. That's, again, an extra callus built up on your face after you've been slapped a couple of times. And that's ultimately good for the long term. So again, reflection is good because you learn from reflection and you ultimately grow as an individual. Okay. So looking forward to 2023, I believe that crypto will begin its macro recovery, but it will be slow. I believe the bottom is, at least for the most part, in, but I do not believe that we start ripping again until 2024 come the next Bitcoin halving. And to kind of expand on ripping, what I mean by ripping is, see new all-time highs. Bitcoin to 100K, I do still think that's 100% going to happen at some point in the next 2, 3, 5 years. But it will not come inevitably until the next Bitcoin happen. At the time of writing, you guys, too, Riot is looking great. So, just a little midway before I talk about the hype sectors and really the major theme that I expect to play out that will positively affect Waves Cap, you guys. If you do want to know how I'm trading my personal portfolio on a day-to-day basis, if you want my daily newsletters that I send out, this one I just referenced right here was the newsletter that I sent out yesterday. This is my final newsletter. Every trading day, I do this every trading day. I do the trade alerts, the macro analysis, and the price targets. So we working, This is an example of yesterday's newsletter. We covered Tesla, SoFi, Unity, Plug Power, Bitcoin, and Riot. And just scroll down, this is what it generally looks like. Riot has been crushing it the past 2 days. It has significantly outperformed the markets, even today as the markets are red. And, things are really looking up for Riot. So that's great, you guys. And I'm really excited to see what happens, especially when the January effect kicks in. Go watch my January effect video if you haven't. This one right here, January effect. And also check this out, my top 3 buy and hold stock picks of 2023, because really this kind of falls into the hype sector argument that I want to discuss as well. Okay, but anyway, you guys, if you want to know how I'm trading on a day-to-day basis, if you want my daily newsletters, if you want a complete breakdown of my entire personal portfolio, which again, updated every day, and then I rationalize my thoughts in those newsletters, give you guys my daily thoughts on the markets. That's the first link in the description box down below, my complete portfolio daily newsletter. When you sign up, you receive everything that this box entails. $15 a month, $40 for every 3 months. I do my best to make this reasonable. I think this is more than fair, to be honest, for the amount of work I put into this. So if you guys want to check it out, that's great. If not, no worries at all. I do appreciate you watching this video. So let's touch on this, and then, I'll read through this because the small caps and growth sectors, similar to Riot, do play beautifully into a few of the sectors that I think will pan out, that I think will have the highest probability for experiencing that hype cycle, or those hype market cycles in 2023 where something just goes absolutely ballistic. Think cannabis 2018, again, crypto 2017, 2020, biotechs right after COVID hit, that kind of thing. Okay, so that's what I mean by hype cycles. And then we'll close out the video by talking about what happens to the stock market after a 20% down year, and we'll go over that just to really reinforce some of everything we're talking about. Okay, so lastly, the major theme that I expect to play out in 2023 is small caps and growth sectors outperforming large caps and legacy sectors. Remember, the January effect historically favors small caps, so this theme should be especially relevant in Q1. Similar to crypto, growth stocks and small caps have gotten absolutely obliterated over the past year. On a brighter note, I believe this only encourages the idea that the comeback will be even greater. As we've been saying, you fall hard, you bounce hard, and it's always darkest before the dawn. Let me know if you guys know what song that's from. As you know, we've spent the past few weeks constructing the portfolio upon this thesis, and I'm extremely proud and confident about the stock, options, and crypto portfolios we've built as we head into the new year. And as I said yesterday, there's no one I'd rather be riding into 2023 with. Let's keep those green waves coming. Okay, so again, even if you're not part of Waves Capital, for real, if you're not part of the newsletter portfolio group, cheers to you guys. If you're still watching the videos, again, I know you're still interested. I know you're still playing the game. Times are hard. Times have been rough for all of us. But again, it builds grit. It builds mental fortitude. And ultimately, not just in trading and investing, those are qualities. Those are characteristics that will make you a stronger individual in every aspect of your life. So, we got to throw in some TED Talk motivation a little bit. It's a new year, okay? I personally didn't make any New Year's resolutions. I guess if you did, that's great. Let me know what you did down below. But I'm kind of just always focusing on bit by bit, tiny piece by piece, making myself a better person. And thankfully, I've spent so much of my life doing my best to optimize my routines, my health, my wealth. And, I failed many, many times as well. So trial and error is the ultimate teacher. Always remember that, you guys. I do my best to teach, but that's only because I failed so much, and I feel that I can teach from my failure. That's really where a lot of the ability to teach comes from, I think, is learning from your failures, processing your failures, and ultimately moving forward and altering your strategy to work towards a new strat that doesn't fail. Okay, so that wasn't very eloquently said. Let's talk about the hype sectors, or the sectors that I think could potentially see a hype cycle, and we'll close it out with this. Okay, so the sectors that I think could potentially see a hype cycle are artificial intelligence, space, so artificial intelligence, I'll kind of break down my general rationale. Again, I will make a video about this soon where I kind of dive into, we'll go over the websites and stuff, but artificial intelligence, chat GPT, Lensa AI, they're like generative AI generated art is really taking over the zeitgeist. And again, the cultural zeitgeist matters so much when it comes to these hype cycles. 2, space. SpaceX just raised at, I believe, like 175 billion, give or take a few bill valuation. That creates so much hype around the space sector. Maxar Technologies, another satellite company, just got acquired, or proposition for acquisition. The company jumped, 2x, the stock itself 2x in a single day. Of course, options probably like 1,000x. Lastly is going to be green energy. There are a lot of plays. So solar is an example. One of my favorite green energy plays personally is Plug Power. And, lastly, I'll just give, I think it's green energy and genomics are tied in my head. So CRISPR is the perfect example of a genomics company. The genomics revolution, I think, is going to take over. It's really more a matter of when, not if. It's almost inevitable in my mind that genomics will have its 10x, 100x moment in the markets. But again, it's only a matter of time. So that applies for all of these. My number one is AI, just given the cultural trends that are happening right now before our eyes. So my money is on AI. And in that video, hint, one of those stocks is my top 3 of the year, which of course makes sense. In this video, I will break down a few of my favorite stocks to play these potential hype cycle trends. All right, so that's that, you guys. Let's close it out by talking about what happens to the stock market after a 20% down year. It's complicated. This is a CNBC Pro article, so shout out to CNBC. Wall Street's worst years. So this is gauging the S&P 500 dating all the way back to 1945. Okay, so 2008 was down nearly 40%. 1974 down nearly 30%. 2002 down 24.3%, and 2020 now down about 20%. Now, it's crazy. This is the first. 2022 was the 4th worst year. There we go. 2022 was the 4th worst year in the S&P's recorded history. That is bonkers. Okay, so now the good news. The market tends to bounce back in the year following losses. Should history repeat, and there's no guarantee it will, of course, but it does tend to rhyme. Should history repeat itself, the S&P 500 has a good chance of posting an above average return in 2023. Sam Stovall, Chief Investment Strategist at CFRA Research, said the S&P has had down years 21 times since 1945, 20% of the time, but the following year has been up 81% of the time with an average gain of 14.2%. That beats a typical year when the S&P rises 70% of the time and posts an average gain of 86%. And as a little bonus, you guys, I will say, if you stayed this long, when January and February are green, if we have a green month for the S&P 500 in the months of both January and February, both are green, the chances, I believe, are 98 to 99%. Dating back historically, there is a 98 to 99% likelihood that we close out the year well in the green or see at least a double-digit gain in the S&P. Okay, so that is important to reference, and I'm bullish. I'm bullish on the markets right now. I'm bullish on the markets as we close out this week, going into the CPI reports, and I do think the January effect will kick in. So, you guys, let's make 2023 a great one. Cheers to you if, again, you're still riding the waves with me. And again, if you do want to trade with me on a day-to-day basis, that's going to be the first link down below. Also, let me know in the comments down below what you guys think about the new year. Are you bullish? Are you bearish? Do you think the S&P and the markets are going to end higher? What's your Bitcoin price target? Literally any predictions you have for the new year, please let me know in the comments down below. And I appreciate all you guys. I do love all you guys. And yeah, I look forward to having sick year with you guys. So I'll talk to you down in the comments. And until next time, you guys, always remember, take action, make waves. Peace.